So we're starting our blockchain cryptocurrency fintech panel, and it's great pleasure for me to invite our very good friend Vera Shokina, Managing Director Silicon Valley Bank, to moderate this discussion. Vera Shokina is Managing Director of the Silicon Valley Bank Global Gateway Group. In this role, she assists international venture capital funds and innovation companies in the emerging markets with their US and international market expansion. Let's welcome Vera.
Thank you, Stas. Thank you, everybody, for joining our panel on fintech, blockchain, and cryptocurrencies. It'll be a short but very interesting, very exciting discussion. Why don't I start with letting the panelists introduce themselves very briefly, just given the timeline, maybe just the name, fund, and the stage and sectors where you're investing.
Okay, let me start. So my name is Viktor Arlovsky. I'm managing partner of Fort Ross Ventures. We have $300 million under management, and we invest primarily in fintech, AI, IoT, marketplaces, and cloud. And we start with B rounds onwards. So that's basically it.
Thank you.
And likewise, nice to meet you. I'm Don Butler. I work also with a $300 million fund called Tom Vest Ventures. I'm the managing director. We're heavy investors in 3 verticals. That's financial technology, marketing and sales technology, and cybersecurity. And within those, we do everything from Series A to Series C. That's kind of our range.
Thank you.
Hi, my name is Arvind Purushottam. I'm the head of venture investing within Citi Ventures. Citi Ventures is Citibank's corporate investment arm. We invest in companies in and around financial services. So that includes fintech, but also companies in data and machine learning, in cybersecurity, in user experience and marketing technology companies. We invest post-product, so quite stage agnostic, but not in the very early seed stages, everything from, let's say, Series A all the way to very late stage companies. And we typically invest between 3 and 10 million per new investment and invest with other great syndicate partners.
Great. Thank you.
Dobry den. Duncan Davidson, Bullpen Capital. Yes, there's a lot of Russians here. I love you guys. We are a post-seed fund, so we're part of this generation of micro VCs that emerged in the last 10 years. We invented this stage called post-seed, which, as you might imagine, is after the seed round. We're not really focused on investment areas. We do fintech, among other things, but we do have one crypto company that did an ICO that I think might be a real living example of a utility token. We have a couple other very interesting crypto companies coming along, and they're struggling with whether they do an ICO or not. So hopefully I'll be able to talk about that today.
Absolutely. So we have a great panel. We have 1 general fund, 2 corporate VC funds, all focused on fintech, and 1 person with a great experience in ICOs and exposure to cryptocurrency. So we hope to cover all those interesting trends. Why don't we start with the general trends in fintech? Why don't I start with you, Victor? So what do you see as, as general trends, where the big thoughts, your big ideas that will be shaping fintech in general? What areas do you like the most?
Well, obviously, banks become more data-driven. They start discovering how to work with data, right? And how to make decisions based on data. They also really started doing a lot in fintech area, and they discovered how difficult it is to compete with startups in these areas. So I think that there will be a lot more cooperation. So we also see some signs of big banks started buying startups, and I think that they just, this appetite to buy startups is just a beginning of a big journey. So there will be a lot more coming in this space. We trust that there is a big room for challenger banks here in US. The same way it's just developing in UK now, where probably legislation is much more soft for challenging that type of challenging banks. But I'm sure that there is a big room for this type of activities here in the US. Blockchain is an early stage of adoption by banks, so I don't think that it will just come in like next 3 to 4 years. I think that this might be like a new generation, next generation of investment by banks. Now it's like all in like seed and pilot stage. So again, AI and machine learning and all this is probably a big thing for fintech, challenging banks, new type of banks which are quite like new technology type of things. Is an emerging space in which we are going to invest in next few years.
Arvin, so you also have a large bank as a big LP in your fund. Do you agree with Victor? What do you see in Citibank as driving the innovations? What are the companies and innovation trends that you are most likely to adopt soon?
Yeah, I agree for the most part with what Victor said. I think we're starting to see some acquisition activity among the big banks for fintech companies, and it's sort of a little bit of anybody's guess whether that will accelerate. Big banks certainly have a lot more regulatory considerations to take into account before they acquire any kind of company, and so that's definitely something that we need to discuss some more. I think in terms of how Citi has approached. I think starting about 7-8 years ago when we started to put this program together, the venture investing program, we've said, like, look, I think we ought to be very open to partnering with companies. So when we've invested in these companies, we've invested in over 55 companies at this point over the last 7.5 years. I think over 40% of those companies have actually done commercial deals with Citi, where we have some kind of a commercial partnership. And that's important, right? I mean, that means that Citi is getting value from these partnerships, but what Citi is also getting is some new capabilities, new thinking into the organization through these investments that we make. Even the ones that we're not partnering with potentially or not yet, we get a lot of learnings. And so our approach has been, let's partner, and that's a sort of a fastest way to bring in new capability and new functionality, products, services, et cetera, for our clients and customers. And so that's kind of been the approach we've been taking. In terms of sort of trends that we've been looking at, sort of two things that I'd mentioned. One is we're seeing some of the things that happened in early sort of consumer fintech coming to institutional, right? Coming to B2B. And so whether it's in the payments area, whether it's in lending and trade finance, whether it's in some other kind of institutional banking, we're seeing some of the same innovations, whether it involves machine learning or other type of fundamental capability come into B2B, so we're starting to pay a lot of attention to that. So again, the fintech revolution that started with perhaps lending and payments is now coming to other large areas of the financial services economy, like insurance, like real estate. We made an investment in real estate last year, a company called HomeLight. We're about to announce one more in the real estate space. Again, a huge multi-trillion-dollar market every year, so I think it'll have a huge impact when fintech really comes to the real estate space. And then the third thing that we're paying a lot of attention to, especially given our businesses around the world, is some of these payment schemes that have much more clear regulation, more openness in other parts of the world, and what it means to our payments businesses. And so we're starting to pay attention to these alternative payment methods, APMs as they're known, and how it impacts both our consumer as well as institutional.
Thank you. This is very, very helpful. So, Don, this was the perspective with two corporate VCs behind, which are big banks with a lot of interest. So, what do you see as a general fund investing in startups, and what are startups saying? What are the hottest trends that actually are going to disrupt those big banks?
Well, it's interesting because I think we have. a couple of interesting case studies, and on the general trends, it's remarkable. Arvin and I haven't caught up for quite some time, but it's remarkable how similar our portfolios have been sort of building out. So we got very interested in the intersection of real estate and finance, and that's led us to do a couple of different investments. I think we now have 3 investments on that sort of nexus, 2 that deal with mortgage or home equity, 1 that is sort of a financing platform. If I look at the longer trend, back to the first question, it almost feels like the history of online financial services is one of increasingly complex transactions getting done online as more data sets become available. And I feel like that's kind of what's playing out in the real estate space. In terms of sort of your question about the interaction with banks, what's sort of interesting is I think you could say that we have investments in what I would consider to be becoming sort of challenger banks, SoFi being one of those, which has sort of taken on the banking sector pretty head on. We also have an investment in a company that is both a challenger bank in the US market, I would say, and also a partner to banks overseas. That's a company called Cabbage. And what's been sort of interesting is, when you look at the relationship that Cabbage has with banks overseas, and these are banks that have both invested and have OEM their platform. This is like Santander and ING and others. We thought that we might be displacing a part of their business, where in effect OEMing or taking over part of their business. And in fact, what we're finding is we're using new data sets to price risk that they would never have looked at. And so it's actually, instead of being competitive, we're just finding that we're just different. And to me, it's funny that the question of partner or foe, it's actually turned out to be a much more nuanced question.
So both you and Victor, you mentioned challenger banks. Can you talk a little bit more, about the concept and what's the big challenge there, and so for us to better understand how to think about it?
Well, it's a matter of fact that all fintech companies have no banking license, right? So it's really, that's basically the challenge for the fintech companies. So they, to a certain extent, they don't need a license, but after a while, they discover that they can't do much without license. So I think that we will see a new generation of banks that are like greenfield projects, which have license, but doing everything from scratch and evolve as a fintech company. So I would think of a fintech company which is big enough with the large checks, acquiring a bank, or maybe acquiring a license, getting a license, and getting to the full marketplace for in which historically banks are working. So I think that this might be an evolution of fintech companies. So I think that sooner or later banks like Revolut will acquire a banking license. Probably Credit Karma will go this way at some point in time. So we'll see that this new generation of companies will evolve to become real banks, but with the whole new technology. And what banks are lacking now is eventually, you may think of the bank as a marketplace for money, right? So the thing is that it's a short tail product line. So you need to expand the product line to become a marketplace. You have only few products to sell in money market. So banks will evolve to IoT space, these new banks, because they have a capacity to grow this way. So there will be a long tail of products, and this will just become a real marketplace with a lot of SKUs in it. So that's what I think the challenging banks will look like in the near future.
Anything to add to this?
No, I agree with you. And what's sort of interesting is that I think there probably has been one evolutionary shift with regards to the banking license. And I think my read on a lot of the market, and we've been heavy investors in the lending space, a lot of people avoided getting a banking license both for regulatory reasons and then also fear around the multiple that they would get when they were either bought or went public. And I think if you look at how Lending Club, where we were sort of an earlier investor, has trended in the market, it came off of being treated like a fintech company. It started being treated more like a bank. It trades a lot more in line with like net interest margin. And I think if that continues to be the trend, then I think people begin to look at it and say, well, if I'm running a lending business, for instance, if I have a 5 to 6% cost of capital because I don't have a banking license, I don't accept deposits, then maybe I'm willing to make that trade and go get those things and incur the regulatory costs. But I wouldn't be surprised at all if you see some of the fintech companies move that way.
Arvind? Mm-hmm.
Yeah, I think the sort of the growth of challenger banks. One thing that we talk about a lot is a lot of them are growing out of a lack of great user experiences from a lot of the bigger banks, right? It points to how important user experience is when financial products somewhat are very similar across different banks, right? And so there's a high premium placed on user experience to meet the customer where he or she is, to be able to bank the way they want to bank. And so especially in Europe, I think Victor mentioned Revolut or N26 or any of the other sort of few banks that are there in the UK that are growing. I think you're seeing that success because of how they've simplified the banking experience for sort of the next generation especially. And I think the big banks, Citi included, but also the other big banks are learning from that, right? So this learning from the ecosystem, I definitely see that happening within financial services, and they're starting to offer these kinds of mobile banking kind of experiences for customers. Citi recently announced a national digital bank strategy, which we see the activity that's going on in that, and I think you'll see more products coming from our consumer bank, sort of mimicking some of the functionality that you get from the mobile, and sort of trying to do best in class in that. And so, financial services is challenger banks to some extent. I don't know if I agree with the premise, in the sense that, yes, they are starting to come into the financial services world, but financial services is so big that I think there'll be many winners. And I certainly think that challenger banks have raised the bar for all of us in terms of experience and products.
Yeah, Duncan, so 2017 was a breakthrough year for ICOs. Being part of Silicon Valley Bank, I don't think there was a week where I wouldn't have 2-3 requests from startups from all over the world, from US, from all over the world, talking about, companies doing ICOs. So what made 2017 such a breakthrough year? What drove adoption, supply, demand? Can you bring us up to speed on that trend?
Well, the simple answer is Ethereum, but let me get you a deeper answer. So first of all, we do Fintech, find it a very specialized area. We did HomeLight, it's a post-seed deal from Bullpen, so thank you very much for coming in. We caught at the inflection point. But the problem with Fintech investing, from our point of view, since we're broadly based, too regulated. We'd rather escape the regulatory area and go into unregulated. So what is ICO, what is Bitcoin and blockchain? It's the Wild West, literally. So you sort of see money flowing down a river. If there's a rock in the river, call that regulation. You want to flow around it. You don't want to smash against it. So the US government, in its eminent wisdom after the 2000 bubble, killed the small IPO, literally destroyed it. It used to be like Amazon went public for $400 million valuation 20 years ago. It was in the range of a normal retail investor. Facebook goes public at $100 billion valuation. Do the math. It turns out people have. If you had put $10,000 into Amazon at the IPO and held it 20 years, you're worth $7 or $8 million. $10,000, $7 or $8 million. Think about that. But if you had invested in Facebook at the IPO, $10,000, you're worth 30. BFD, or whatever the phrase is in Russian, I don't know. But the point of this is the US government killed and made a constipated capital market. So what happens? Eventually the river goes around the rock. So ICOs broke out because Ethereum established a way to create your own token on top of the Ether token. Then anybody can then take the token and launch an ICO, an initial coin offering. And in the early days, it was not regulated at all. You had a few things you had to do, so it broke out. And the breakout is extraordinary. So far, the count is $12 billion raised in ICOs in the last 17 months, 18 months. Think about that math. There's much more money raised in ICOs than the investors from venture put into coin companies. There's more money in ICOs than all internet seed investing. There's more money in ICOs now, I think, than seed investing across everything. In just 18 months, it broke out. There have been attempts to kill it. The SEC is trying hard. China tried, South Korea tried. They can't kill it. It keeps on exploding somewhere else. It just shows the appetite. So 2 other comments, and I'll go back to you. First of all, what I love about this is that previously you do a public offering, it's in America, it's in Japan, it's in Hong Kong. Now, global. ICOs have created the first global financing structure. Everybody around the world can play in this field, lose money, but they can play in the field. Second thing, which I find even more extraordinary, during the first 2 quarters of 17 when it began to break out, by the end of 17, if you had invested in all ICOs, you would have had 13 times your money by the end of 17. People have analyzed all token offerings to date, I think about 2 months old, and if you had bought and sold quickly, 82% return. You can't get that in the stock market. You can't get that, well, maybe get that in sports gambling, but it's hard to get that almost anywhere. If you held to maturity, and they've done the time thing, you're getting a 4 or 5x return 18 months onto the explosion. You know, talk to Citicorp. What are your yields right now you're getting on your investments? 3%, 4%. How good is that? When's your other one, 82%? Yes, I think so.
So depending on who you talk, right? So some people, for I think majority of general population, it's still a very new area, very innovative. Some people don't know if it's going to take off. But if you talk actually to people who are in the industry, they feel that the very early days of crypto ecosystem, crypto economics are already over, and they expect a huge infrastructure build up, a lot of new institutional players coming. So what's your forecast? What's going to happen in the next 12, 18 months?
My forecast is we're all putting it in the wrong bucket. We're putting it in the fintech bucket. It's a currency bucket. No,
it's asset.
That's called regulated.
Mm-hmm.
I'll tell you what I think it's all about, but this will become more clear in maybe 10 years. So you could call me up in 10 years saying you were wrong or you were right, but it won't really matter. In 92, 93, the internet came along and the World Wide Web was invented and we created the internet for people. To me, it's extraordinary. In 94, 95, I was in the middle of this. You go around the world, you need a website. Huh? By 97, every major company in the whole world had to have a website. No, they didn't, but they thought they did. It exploded in a similar way, and so HTML, the World Wide Web, are the rails on which we built the internet, and we're reaping the benefit today. I think in America, 96% of all moms are connected online, which is an extraordinary number. Or what's wrong with the last 4%? I think what we're building now with smart contracts, which are really automated operations, is we're going to build the rails on which we create the internet for machines, not people. So the example I give, one of our companies is called Spot Hero. You can get a parking spot at a downtown garage with an app. You're a self-driving car. You have to park. How do you park? You can't pull up to a garage and look at the big burly guy, and yes, ladies, there's always a big burly guy sitting there staring at you, where's your credit card? You can't do that, nobody's in the car. So instead, you create a token, you create an online app, the car will do an auction for parking spots. The token will bind the option, the car drives in, the gate pulls up, they park. It's a machine, and exactly when they have to leave, they pull out and leave. You can go through the whole boatload of car things, gas, oil, whatever it might be. It'll all be automated. 10, 15 years from now, we'll be sitting in this room and be outside, out of our consciousness, there'll be all these machines bubbling along, doing things on our behalf. We don't even know about it. But they'll be happy, and the car will go to the right place, and they'll get gas and all that, or electricity. So I think we're building the internet for machines, and smart contracts and tokens will be the exchange particle to make this work.
Thank you. Well, this is very exciting. So, Arvind, Victor, do you share this optimism?
Well,
do you plan to tokenize some of Sberbank offering?
Well, to some extent, everything will be tokenized for sure in like 10 years from now. Duncan is right. My son has invested $1,000 into a bunch of ICOs, and he's really making jokes of me being a venture investor because he's doing much better than I now. So I'm not sure for how long he's going to be doing as good as he's doing now, but yeah, I mean, for like speculative investment, this is a really great thing to have. I fully agree. I mean, to what extent and
so you call it speculative still?
Well, it's very much speculative for sure. I mean, it's much more speculative than anything else. I mean, Duncan said that this is like gambling, right? I mean, it's to a very much extent is. So you never know. I mean, most of things you invest into ICO is like white paper. So you have to trust that people who just put something on paper will deliver, right? So
there are some big institutional funds went into the space which can speculate. They invest in innovation. So, like, everybody agrees it's still speculative, or?
Well, any investment which makes you so much returns in such a short period of time is speculative investment by definition, right?
Well, you know, I think it's just super early days. To your point about you know, institutional investment funds going in there, I think that sometimes you make speculative investments, right? Like 95% of what they do, there's a rationale behind it. There's an existence proof. There's a market. There's all this kind of
opportunistic
stuff, right? And then you can take. I mean, that's why you have a portfolio. You know, you put a little bit of money, you know, less than 5% of your capital into some of these ICOs. I don't think it's a, I think it's a pretty smart idea because, I think it's a way to learn, it's a way to experiment, and so on and so forth. So I don't think it's I don't think it's a bad idea. But I do think it's speculative. The thing that we continue to look for, obviously, there are lots of regulatory issues around it, but the thing we continue to look for, whether it's for cryptocurrencies or tokens or even just regular blockchain-based applications, is what are the real use cases? What's the utility of these things? In the future, will some of these utility tokens be like our rewards programs, right? So Citi runs a large rewards program called Thank You when you use credit cards. Are these utility tokens sort of the next generation of that, much more easily tradable, much more easily manageable, fully automatic, et cetera, et cetera. So those are some of the ideas that we've been playing around with, but it's very early days.
Just one thing to add. I don't want to name the company because it wouldn't be fair, but there is one company which just came to me speaking of the investment. It was, I think, April last year, and they were raising like $5 million, so I didn't give them money. And then the guys have like moved to ICO space, and the guys was really very successful. He raised $60 million. Instead of 5 he was just looking for. So well, I think that's really exaggeration. I mean, when people are looking for like 5 million, getting 60 million is something what is not justifiable, right? So it's a pure speculative thing to a very large extent. So just to give an example. To prove that this is sort of a speculation going on. But again, I mean, now we see that markets are really coming down and not as speculative any longer. So I think that all this price, I mean, the speculative price is already in the price of the new ICOs. So we see, again, to Duncan's point, we see a lot of unsuccessful ICOs these days. I think that before September last year, 95% of ICOs were raising money. Now it's hardly like 1 of 10th. I mean, every 10 ICO is going successful these days. So I think that that's now it's, I mean, this market becoming self-regulated to a very large extent. So people are much more distinguished between what is good and bad. So they just look at these investments in pure long-term way rather than just making money on the spot.
Duncan, what's your view? What kind of investments, risky investments, not speculative, but where are the best opportunities in blockchain, and what's your fund strategy in the area?
What's interesting is we sort of intentionally stayed away from some of the cryptocurrencies just because of fear of sort of what the regulators would do once they came into the space. And we're primarily focused on our direct investments here in the U.S. market, so we're living in the U.S. market and therefore sort of have avoided it. What I would say is, we just invested in a company called Figure, which is Mike Cagney, the guy who's the founder of SoFi, his new company. And if you look at them, one of the things that they've been able to do is do something that I would say in some ways bears a resemblance to the smart contracts you were talking about, Duncan, which basically is enabling things like title insurance to be done via a blockchain implementation. And to me, it's the first time I've seen something where I was like, this, I think, will become a large-scale deployment. And part of the way that they're able to do that is they've actually gone around to a consortium of banks and have gotten the banks to agree to work on a private blockchain protocol where one of the banks is a custodian of the assets. And so it's the first time I've seen a company that's sort of straddling the existing infrastructure, the existing marketplace participants with blockchain as like a deployment methodology to go after an industry which a lot of people feel charges a fair amount of money for a real estate transaction, and yet the value delivered is probably could be easily delivered and commoditized. And so that's more the first time I'd say we've seen blockchain implementations where like this we think will become a much more mainstream way of doing things in the next 24 months.
Well, great. Thank you. Unfortunately,
I'll make one quick comment. 92% of ICO, or excuse me, token projects have failed. China did an analysis, 92% seems to be the number. Very few of them actually do an ICO, so it's not the number of ICOs that fail. They are very speculative. There's a lot of fraud and scams going on. What I find fascinating is because of the internet, there's all kinds of guides of how to pick a good or bad ICO. There's a whole rating system developing and websites that sort of do it for you. So in very fast motion, we're replicating what used to be a Wall Street hegemony over analysts and offerings and prospectuses. But that whole system was designed in the 30s which you might think of technically the dark ages. So as a young lawyer, I used to go through prospectus and make sure every single word was right. Imagine that as a job, that you just want to die. So today you don't have to worry about that. So I think the thing is technology is beginning to help fix the problem, that maybe a technological regulation of ICOs would work better than putting it in the hands of the SEC.
Well, I think we'll probably have another 2 hours of discussing those, but our time is limited. So I think the panelists are staying here to judge the competition. Thank you very much for your comments.
Thank you very for great discussion. And now we moving to our startup presentation. Thank Google for providing a new shiny toy, which we will use for electronic voting. Please open laptops. Dear judges, open your laptops. Yes.
That's where they're
Yeah, we'll try to use it.
So we thought they were going to give these to us.
And yes, if you click, yes, it's open voting form. I hope it's self-explanatory, but in case we have any trouble, we still have 3,000 years old technology which is still working well on the paper. I also asking all investors with blue tag, please take seats on the front row. You have to serve as our jury, and please fill scores for companies. Don't forget to put your name and name of the company that's presenting. And if we are ready, by the way, everyone in the public welcome to participate in public voting using application SVOD 2018 on App Store and Android Store. We will compare your votes with the professional investor votes, and we'll let you know how good you are as investors. Now, it's my pleasure to invite BIS, our first company, to present today at this panel. Let's welcome BIS.
Imagine you have a CFO in your pocket. Now you're in control, and you get instant answers to your questions. My name is Wiebe. I'm the founder and CEO of BIS Inc. It is an absolute torture to pull your financials for most people, including myself. This is why I founded this. And you've all heard the stories of companies that have 1 month of runway left, and they still didn't know the actuals and the detailed numbers. So what we do is we provide easy access to your financial data for decision making. And we are focusing on the business leaders, which is crucial because that's an underserved market. So the 3 components. First one is basic dashboard, AI-driven recommendations, and then we have a CEO coaching network on top. It's interesting, actually, that out of our beta customers, it's the CFO who uses us the most, which was unexpected because they're behind a spreadsheet the whole day. It turns out they need immediacy. Kate, one of our beta customers, is using the app every day. Here's the video.
The BIS app is currently in private beta, with our first customer using the app every day. BIS has 4 cards: cash, runway, expenses, and revenues. Here is my cash flow forecast with peaks and troughs. All of this is automated by machine learning. Now let's go to my favorite feature, the what-if scenario. We're about to sign up a new customer who will add $25,000 to our revenues. How will this affect my break-even? I can quickly see that my break-even has now moved from September 2018 to June 2018. Time for a party. I can share this great news with my colleagues and use it to compete with other CEOs in the startups ranking screen. Here is a push notification with critical alerts regarding my business. This allows me to start benchmarking and learn where I can do better.
So why the heck is Intuit not doing this? And that's the question we asked ourselves before we incorporated, and we sat down with them. Turns out, Intuit is focused on the person who closes the books, not on the business leader. Secondly, what we can do today will take the Intuit platform at least 2 more years. We actually have their former chief architect on our advisory board. Now, how about the other elephant? Small and medium business. Why would you go after that market? It's impossible. The acquisition costs are way too high. Well, not any longer. So today on mobile, through Facebook mobile and other social media, the cost to acquire users in small and medium business has never been lower. So we started building a waitlist. We're still in stealth, but we started building a waitlist of friendlies in the startup community. That's obviously very tiny. Later on, we'll roll out to more mature companies in the United States and then eventually globally. We have a world-class team. My co-founder is a former senior engineer at Apple. He ran his own company. I ran a few companies, including the mobile business for Angry Birds, Big Fish, and it also happens to be I hold the world record for most #1 hits in ranking on the app stores. We've bootstrapped this to date, and we're going to be raising 1.5 in seed to scale this business. Now, there's an 83% correlation between fatal business decisions and the accessibility of financial data. On the flip side, you have growth scenarios. Would you want to be in control of your financials? Thank you.
Thank you. Thank you, Biz. And now, time for questions.
So to determine product market fit, it'd be nice to know if you had customers and are they using it and churn, retention, and all that. Do you have anything you can share on how many customers, what their usage is like, how engaged they are, et cetera?
Yep. So we're early stage. We have not even launched on the App Store. The handful of customers that are using our app right now are using it every day, which is higher than expected. My original expectation was 20% DAU divided by MAU, which is standard. So we're hitting that one. My next goal is 30-day 20% retention. I think we can hit that as well. You're not going to have a Slack model where you're going to sell a seat for every employee in the company. This is really focused on leadership. But we think with the CEO coaching network, we'll see clear network effects of this, because it is really a blue ocean here.
I don't think you want to be the accounting system for the startup, right? Like, you have to hook onto accounting systems.
Correct.
So just talk about that a little bit, number one. Number two, it seems to be a very active area startups-wise in small business, financial technology. So in terms of financial accounting, CFO functionality, et cetera, et cetera. So how do you think about the competition and how Biz is positioned?
Right. So let's start with the question on accounting. So we don't do accounting. We kind of start where QuickBooks Online ends, and they own the market. They have 93% market share. So for now, it's useless to go head-to-head. There is, biggest competitor, honestly, is Excel, and we're not going to replace that in the next 10 years. But what we see is, with the CFOs that are using us, is, as I said earlier, the immediacy. So the other part is you get your answers so much faster that you can iterate much faster as a leader. When it comes to competition, there is a lot of roadkill. This is not a new problem. This has been around for decades. Interestingly, the big elephants that I just mentioned are the reasons for the roadkill. And the other one is the accessibility to the data, whether it's banking data or the accounting data. The startups that are out there and build basic dashboards, I think just focusing on the utility is not good enough. You need that network. You need those insights. a lot of the players have zero engineering, forget about AI experience, which misses, I think, the point. But the number one, I would say, is the focus is on the accountant, not on the business leader, which is fundamentally different. Because I can tell you, you send me any accounting dashboard, I will not look at it.
I guess, can you speak a little bit about distribution? You mentioned Facebook ads. Does seem like a nice low-cost way to acquire SMB customers, but it also strikes me that to build awareness amongst small business owners, and that, and kind of related to that, the size of the small business, because it strikes me that the bigger they get, the more complex the transactions, and therefore sort of understanding. And for some background, one thing I would say is like one thing we've noticed with Cabbage, which does small business loans. So they went through a project where they're trying to codify SMBs by industry, and one of the issues they ran into, which they had to sort of brute force solve, but was this issue that, you know, if you see an insurance payment, if you're a construction company, that usually means that there was some sort of claim that got paid by the insurance company. If you're a dentist, well, insurance is revenue. And so understanding which one is revenue and which one is an actual, some sort of indication that something happened. And so it feels like one of the devil in the details. So if you can talk to sort of the data sources and then also customer acquisition.
Because you're focusing on cash management first, you don't have to do the whole ledger. That's number one. So it's a lot simpler than you actually think. I was surprised by how much we could do already with machine learning and being only slightly off on 3 lines in a whole chart of accounts. So I'm not a CPA, and I don't intend to be, but I think you can do a lot of damage simply by a mobile interface and give them a tool. There is, in the future, once you build that data co-op, which is where you, by using the anonymous data, benchmarking every single metric so that a business leader can then learn. And then, for example, your example is, hey, I have an insurance claim, and how did somebody else tackle that? How do I classify that? Those type of learnings will really surface, and that is where the true value is in the future. So that's why, you know, it will take 10, 20 years before you can do probably 80% of a current CFO job.
I have a short question to you. My experience shows that most of the startups facing the problem which you just mentioned, facing it due to the lack of discipline. So they have no data. The data is being kept somewhere not in the accounting system. So how are you going to solve this issue? Because that's the biggest issue, how to make them disciplined to put everything in your app to then discover what's going on.
Yeah, great one. We started with the worst possible cases where there's no AR, no accounts receivable, where a lot of companies here in the Valley specifically are in that situation. They don't care about QBO, QuickBooks Online, because they only use it for reporting and taxes. So what we did, lowest common denominator, we said, if we only retrieve the bank data, how much damage can we do, and is it still usable or not? And the sound answer from our customers was absolutely yes. Obviously, you pull in Stripe, as we've done, you pull in PayPal, credit cards, QBO, Xero, whatever, the more accurate you get and the more value you can give, but we made sure we have the baseline covered.
Thank you, Bis. Thank you.
Right. Thank you.
Okay. Dear judges, how is your IT experience? Is working okay? Let me know once you finish judging last company, Bis. And next company, let's invite company Building Bits. Let's welcome Building Bits.
Thank you. Hello, everybody. Wow. End of the day, end of the conference. Hopefully, I can get you something exciting to chew on. My name is Alex Aginsky. I'm the CEO of Building Bits. We're a new kind of real estate company that's truly democratizing commercial real estate, putting the power of real estate passive income into the hands of everybody. Until now, it's been impossible for the average person to be able to invest directly into commercial real estate for a number of different reasons. And it's just really unfortunate because real estate happens to be one of the best performing asset classes of all time. The reasons for the inability are numerous. For example, there are regulatory restrictions that have just been recently lifted as part of Obama's Jobs Act. Also, lack of access for opportunities for the average person. But most importantly, it's lack of financial wherewithal. After all, how many of us really have millions of dollars that we can invest into an office building or shopping center down the street or halfway across the country? So what are we left with as far as deploying our savings? Well, typically it's public equities, which are obviously highly volatile, fixed income opportunities such as CDs and money market funds that have historically a very low yield. And the closest thing to investing directly into real estate are publicly traded REITs, or real estate investment trusts. But the problem with those is that they typically have very high fees, very little transparency, and most importantly, they still don't allow you to be able to invest directly in a specific building. Oh, and by the way, unless you're investing into a REIT, a publicly traded REIT, all real estate is a highly liquid asset class, right? So that's where Building Bits comes in. We've created a revolutionary solution that allows for an individual investor, non-accredited investor, virtually anybody to be able to invest into a piece of any building on our platform with as little as just $1,000. And moreover, that investment, that piece of a building, or bits of a building as we like to call it, ends up being freely tradable from day one since it's qualified with the SEC and can be traded on the secondary market. Clearly, this is a highly scalable opportunity, and we're envisioning within a few short years that anybody sitting anywhere in the world would be able to identify a particular building on our app and be able to invest into that building and be able to reap the income stream from that investment. The market is obviously quite big. We're talking about a multi-trillion-dollar commercial real estate market, but we're focusing specifically on the crowdfunding aspect of that market. Back in 2012, when this all started, the crowdfunded real estate market was about $12 million. By 2015, it was $2.5 billion. By 2020, it's projected to be a $220 billion industry. That's a cumulative annual growth rate of 145%. Pretty impressive. There's a number of players in the space. What makes us particularly unique is the fact that we're allowing the individual investor really anybody for that matter, to be able to invest into a specific building and to have that investment, those bits in that particular building, be freely tradable and liquid from day one. Moreover, we're also providing to property owners an opportunity to now sell to a whole new class of buyers that they've never had access to before, right? The average person. And they can now sell just a piece of their building. That's also never been possible before. We make money in a number of different ways. In fact, we benefit by not relying on any one particular income stream. So we have numerous income streams that start with seller commissions that we charge to the property owner that gets paid at the time that the building gets sold, to investor fees, secondary trading fees, asset management fees, exit fees, etc. But because we have numerous income streams, we're not dependent on any one, and we don't have to charge any one market participant a high fee. We've assembled a truly impressive team of professionals, multifunctional team that has a combined experience of over 125 years. Everything from technology and investments to marketing and real estate. The company was founded in the end of 2016. In a matter of 30 days, we raised a $1.7 million seed round. We've developed, up until now, and it's ready to be deployed, a full-scale enterprise-level solution. And we are literally days away from the final SEC qualification. We've secured a number of properties that are going to be listed and ready at launch, which is scheduled for next month. The next phase of our company's development is actually asset tokenization and putting all of the buildings on the blockchain. 90% of all millionaires become so through owning real estate. More money has been made in real estate than in all investments combined. Andrew Carnegie said that over 100 years ago. We believe that it still rings true today. We're now raising our Series A round for $3.5 million. Come join us. Thank you.
Thank you, Building Bits. Questions?
May I ask, why are you here not at ICO? Why not doing ICO these days?
We're considering doing an ICO as well.
What do you need a round for then?
We want to bring on board VCs that will bring more than just capital to the table. So, okay. Smart money.
Thanks.
And just a clarification, is this an equity ownership, or is this an ownership of like some sort of debt stack on top of the building?
You're talking about the individual investors?
Yeah,
Yeah, equity. They end up getting equity in the individual buildings.
And then I guess kind of a follow-on question, because we've started to see more commercial properties coming online via like an online means. How do you sort of see the management of the commercial property being done? Is that through?
That's in-house. So we're doing all of the asset management in-house, but we're focusing on properties that require very little management oversight. So imagine, a Starbucks or Walgreens that has a 10, 15, 20-year lease in place, and the tenant is pretty much responsible for everything inside that building.
You just mentioned, the competition on the market. So who are your competitors then?
So there are no direct competitors, but the closest competitors to us are companies like Fundrise, for example. But what they do is I don't know if you're familiar, but what they do is they offer, basically it's an e-REIT. It's an electronic REIT, so you're investing into a pool of assets. There is not a single company out there, at least none that I know of, that allows a non-accredited investor to be able to invest into a specific asset. Please.
It's a terrific way to use tokens to tokenize a security. Here's a couple questions. Are you using Reg A or Reg A Plus?
Reg A Plus.
And that's for the token launch?
So we're doing our initial offering that's now being registered with the SEC. That's a Reg A Plus offering, and it's a traditional security. But when we're going to be doing the tokenization, that's also going to be done through Reg A Plus as well.
So you're going to do a Reg A Plus offering that you want $1,000 non-accredited investors to come into. So it's a REIT then, I assume?
It's not structured as a REIT. It's an LLC. And each building goes into a separate standalone LLC as well. So the investor is investing into a class of shares that's connected to that particular LLC.
All right. And you found a way to get it publicly on a public exchange that's approved for Reg A?
Correct. So we're envisioning actually having all of these securities being listed on our own proprietary exchange eventually, but initially they're going to be on the OTC.
Okay. So yes. Are you going to apply for a license to be a broker-dealer so you can?
We already have.
Run your
That's in the works. We're probably a month away.
All right. When you do the token offering, Reg A puts a limit on how much you can raise every year. Reg A Plus, 50 million.
50 million, correct.
So you're going to be gated by Reg A Plus and wait out the SEC doing better regulation?
No.
What are you thinking?
No. So each offering is going to be limited to $50 million, but there's no limit to how many of these we can have. So, in theory, by next year, we can have 5 Reg A Plus offerings, 10, whatever we need, whatever the demand requires.
Very good.
A question from the jury? Okay.
They're actually much lower than the industry standard. So for example, the real estate commissions that we're charging to property owners are 1%, whereas the industry standard is 4 to 6%.
Even with all the 4 different types of fees here?
Well, each fee is independent, right? So each market participant pays their own fee. So the property owners, when they want to offer their building on our platform, they'll be paying us a 1% commission, as opposed to paying their buddy broker Bob at CBRE a 5 or 6% commission.
Very good.
Okay. Thank you. Sorry, no questions from public. Thank you. Thank you, Building Bits.
Thank you. Thank you.
And if judges finish with the scoring, the next company is Custos. Let's welcome Custos.
Thanks, Tess. Hi, I'm GJ, co-founder and CEO of Custos, and our clients pay us to get their hands on almost inaccessible data, such as whether a media file has just secretly been leaked. So let's get the slide going. So imagine you Lionsgate Studios. You've just spent $90 million producing The Expendables 3 when 30 days prior to the opening weekend, a screener copy leaks. It slices off $10 million off your opening weekend's revenue. What would you do? You would want to find that bastard and get righteous on him, because that copy that leaked was legitimately received by a recipient you know who illicitly shared it again. Now, Custos has solved this problem for our clients in the filmmaking industry, and we solved it by creating information markets where pirates can rat on each other anonymously for profit. And this has solved pre-release screener piracy for our clients because it makes piracy scary and risky. We do this by paying cryptocurrency bounties for deep data. Now, this anti-piracy use case is a very successful one, but the idea of information markets for deep data is actually quite broad. And our anti-piracy solution for the film industry is running at scale, it's running at generous margins for us, and we now want to replicate this success in other markets to which our patented technology applies. So here's an example of how we packaged the solution for one particular niche market, namely film screener distribution. So imagine Duncan has just filmed his new feature film, and he wants to create a buzz around the upcoming release by sending it out to a few movie reviewers. He uploads a copy of the movie to Screener Copy, and then pays to send it out to a few dozen recipients. Each copy that goes out to a recipient has an invisible watermark embedded inside it. Now, this unique watermark doesn't just uniquely identify the recipient. It also contains a cash deposit, because that's the magic of blockchain and cryptocurrency. You can put actual money inside a media file. Now, who looks dodgy, Victor, if Victor was to take the copy that he received and shares it with a friend, who gives it to a cousin, who uploads it to a dark web file sharing site, we make it trivial for anyone inside the file sharing community to extract that bounty anonymously from anywhere in the world. And the moment that happens, we see the transaction on the cryptocurrency network, and we know that it was Victor's copy. And that's information that our clients pay good money for. So let's look at the unit economics behind a solution like Screener Copy. Our cost driver there is the forensic watermarking costs. It costs us about $1.50 to do the initial preparation of a new title. After that, we can generate uniquely crypto watermarked copies of the file at any number, at virtually zero cost. But the way we price it to our clients is on a per recipient basis. So that allows us to operate at a fairly generous margin. We currently have clients globally. Our biggest client is in Japan. Competitive landscape can be divided into digital rights management, the more passive types of watermarking, and then, of course, the post-leak legal enforcement. But all of these are fairly poor substitutes for the very rapid, very efficient, community-driven way in which Custos manages to detect and prevent piracy. Now, we're raising $1 million to replicate the success in the film anti-piracy in adjacent markets. And we do this by rapidly reassembling and repackaging the modular technology components that we developed for a new media type. Then we start building up a business unit around that, and when sales are ready to scale, we follow the staggered approach where we move to a next market. And we manage this by viewing each market opportunity as an internal venture that we can rapidly take through development phases to the point where it's able to scale as a functional business unit. We're at early revenue stage. We have a number of studio and media technology clients in the Screener Copy business unit, which is at the stage of sustainability. And as the new market opportunities kick in, our revenue can start to scale. Now, if you were to ask any of our investors, our current investors, why they are invested in the company, they usually say they have faith in the management team and the skill and expertise in that team. But if you were to ask management, we would say our greatest asset at the moment is a group of 12 incredibly talented, intelligent, driven individuals and a magnetic culture that has developed inside the company. Ladies and gentlemen, data is powerful, and having access to the right data can allow you to solve hard, ugly problems like media piracy. And the blockchain provides extremely exciting new ways to get access to new types of data. And Custos' mission is to bring blockchain-based forensics to media companies across the globe. And we'd like to invite you to become a part of this.
Thank you, Custos.
Thank you.
Great time for questions.
Okay, I'll start. I love the blockchain stuff. There's been a number of people around the world who have been trying to solve this type of problem with music or movies or both using the blockchain. The most ambitious is called Elastos out of China, and they're actually creating a virtual machine in the device, like the smartphone. They spin it up, you play it, and they spin it down. And they absolutely will count the number of instances, and then nobody can see it. So they solve it that way, but getting their app and their system out is a hard. But if they get there, that is a superior solution. What I'm struggling with your solution, you watermark it, but Hollywood watermarks their pre-Oscar DVDs anyway, and it gets out. And they have so what? They have a watermark on it. How do you actually prevent? You can chase down the reprobates, but how do you actually prevent the 1,001st? How do you say that word? The 1,001th version of this being played by somebody.
Yes, so Duncan, I happen to know that you're invested in digital rights management. So you would know that the problem with digital rights management is having a compliant device. So at some stage, it's always possible to exploit the analog hole where the final link between a screen and an eye or a speaker and an ear is exploited to get access to the media. And forensic watermarking is designed to step in at that point and provide a way of disincentivizing that piracy in the first place because the recipient would be identified. And the tech we provide is compatible with digital rights management like Widevine, for example. The biggest difference here is that digital rights management punishes all of the consumers by locking them into a compliant device. Whereas forensic watermarking, many of our clients make their videos, for example, downloadable to watch on any device by carrying the forensic watermark. To answer your question about the current use of forensic watermarking for the major studios, for example, that solves half of the problem. It puts identity inside the media. The difficult part of the problem is actually finding that, and finding it timelessly. Because if you can rapidly detect a leak, especially if we talk about future market opportunities like live sports broadcasting, if you can rapidly detect a leak, you can rapidly shut down a leak. And that's a pretty nice competitive advantage.
More questions?
Did you talk to movie producers already on this technology? Do they want to adopt it?
Oh, yes. We have a number of indie movie producers. We're in regular discussions with the major studios. Our biggest client, our Japanese client, uses it as a live catalog. They're a very, very active user. They put about 300 feature films per month on the platform, new feature films. And they use it as a buyer-seller platform to prevent screener copies being sent to potential buyers from leaking out of the ecosystem and being exploited without pay or being pirated. And the response has been overwhelmingly positive so far, partly because we had a very nice big piracy bust for our Japanese client just a week ago. Caught a guy red-handed that was systematically ripping off movies, 94 titles stolen.
And just one point of clarification, to have somebody report an instance of that type of copying, is that to the end consumer, or where does that happen?
So suppose you're the bounty hunter that finds a copy of the movie that Victor leaked. You use a watermark reading and extraction tool that we provide to get $5 or $10 in your pocket. You get that by taking the wallet that we embed inside the media and moving the funds into your own wallet. The only thing that Custos does is we constantly monitor the cryptocurrency network. So we just watch for transactions against private keys, against wallets that should have stayed intact. And if we see the Victor wallet being accessed, we know that copy has been accessed. Nobody else can see that. So his identity, his privacy is conserved, which is important for, especially in the US, for certain legislation. So privacy is constrained. We have the information, and we communicate that to our client, and they decide how to act. And it might be legal action against the recipient, or it might just be a credit rating that starts building up, measuring the points of risk in your distribution network.
Thank you. Thank you, Kostas.
Thank you.
So, and if you complete scoring for Kostas, yes? Yeah, sorry. No. The next company is Swite. Swite, please welcome Swite. No?
Thank you very much. Hi, everybody. I'm Alan Avedon, And we are Suede.
Sorry for my accent.
We are building a tokenized marketplace for influencer-powered campaigns. Now, Suede is actually a live platform. It's been live since the end of 2017. And it's been doing really well. It already has 1,000 influencers that are opted in. It has running purely performance campaigns, which is unique in the industry because there are a lot of companies in this space. And it's got a wait list of advertisers, some of them names you to die for. Lyft is eager to start a big campaign with us. In fact, they told us $20,000 pilot, $100,000 a month if you're successful. And there are many like that. We have also a lot of influencers that we can access. 1,000 influencers is not much, but we have access to over 1 million influencers directly on a partner. So we hacked both sides of the marketplace quite easily from the get-go. Everybody said it was a tough problem. We didn't find it that hard. One thing that we are really, really unique at is the fact that we own key patents of this industry. We own influencer marketing patents with priority dates going back to 2005. We own this industry. Now, we don't know how to monetize this yet, but we are righteous about it, and we feel it gives us a moral right to lead this industry, and we'll find ways to make it happen. So why is influencer marketing successful? Well, because paid advertising has got a lot of problems. Paid advertising, if you look carefully here, oh, I'm sorry, I think there's a pointer here. All right, so basically paid advertising costs have skyrocketed of search and any other medium. A lot of bots, a lot of fraud. If you look at another problem that's prevalent out there, conversions are going down. So paid advertising is not doing that well, even though it's still growing well. But influencer marketing is siphoning a lot of that business. Now, influencer marketing is still a small business by any standard. If you look at that chart there, it's only $5 billion only. But it's growing at about 35% rate, which means it's going to be about $10 billion in 2020. That's still a drop in the bucket compared to the $200 billion of paid advertising. So now if you ask influencer marketers or marketers altogether, if you ask them, what's your #1 problem out there? Why don't you use influencer marketing even more? Because everybody knows that influencer marketing is a successful strategy because it comes from an authentic source. It's got a lot of benefits that paid advertising, which we all ignore, don't have. So the #1 issue, they say, is determining the ROI. We don't know what our ROI is, so it prevents us from going forward with more investment. There are other problems, but that's by far the #1 issue. So here's the ROI. Having a positive ROI, we, by the way, guarantee an ROI. I think we're the only company that guarantee a positive ROI. The other problem, if you ask influencers what's their problem, and they say, well, I need some more tools to motivate my fans to take action because that's how I get paid, especially if it's a performance marketing style of campaign. Now, that's the wall that influencer marketing is going to be hitting. I'm not sure who's going to be paying for this wall, but we have found a way to get around it. And we think we can solve both of these problems with a very simple trick. We're going to tokenize. Now, it's not a trick. It's a real opportunity. And this is what it looks like. Influencers will motivate fans to take actions by an extensive reward system that's allowing to pass tokens around from influencers to followers back to the advertiser. That closes the loop. And advertisers pay only for verified conversions. Both problems solved. Now, it's a little more complicated. Influencer marketing is generally a fairly complicated practice. If you look closely at that, sorry if you have to squint there, but influencers can do a lot with with tokens that they earn. They exchange it to fiat, They access exclusive campaigns. They can access exclusive tools or premium tools that we have developed, like we have a content sharing tools that are free, like you'd pay on buffer for. And consumers can, which are the fans, can use the tokens to access product discounts, free shipping, exclusive content, and so forth. So here's the summary of it. So we're solving the two biggest problems in influencer marketing, guaranteed ROI and motivating fans to convert. We already have a live platform, and we have key IP that's protection. I'm Dr. Alan Avedon. I have several companies under my belt, and I would be very happy to speak to anyone here who's looking to help us out. We're looking to raise $1 to $2 million. And we have big plans here. We're going to do an ICO sometime in the March timeframe. Thank you.
Thank you. Questions?
Okay, another terrific token idea. I love influencer marketing. We have a couple companies that are scaling fast or using that channel, which is hard to figure out, but it turns out to be lower cost, certainly lower than SEM or digital marketing. Your plan for your token, are you going to do, you're doing a normal fundraise. Are you planning an ICO, and would an ICO fit? And I can ask you more, but I'm curious if you thought about that.
First of all, there's a problem. When you issue a SAFE, which is rolling down the pricing can down the road, and you do an ICO, there's never a pricing event. There is a problem down the road. I agree. We can talk offline how to solve that, but there's definitely a problem. We think an ICO is good because we believe we can raise $30 to $50 million and take a huge leap forward that way. So
look, it's a longer conversation than we can do right now, but when Marco at Cooley invented the SAFT, S-A-F-T, everybody did SAFs. So all these private pre-ICOs are SAFs. And then there was a Cardozo Law School forum where they trashed the SAF, saying it'll be like honey to bees. In this case, it'll be a marker to the SEC, go after these people. And that's exactly what's happened. So the SEC now is looking at any SAF deal and investigating it. It's really sad. But the problem you have is if you were a utility token, you wouldn't have to deal with the SEC. If you're a security token, every time you issue more tokens to reward people and expand your market, you got to go through a public offering. Even a Reg A plus, you have certain limits, but you got to go through a process, right? So my recommendation to you is fund this thing privately through the venture side, get it launched, and do your token offering in such a way that it remains a utility token and doesn't go through the security side.
Agreed.
Okay?
It's a problem we've thought of, the SAFT issue.
Yeah, I have another thought for you to think about, which I don't think people have thought about in the token world, which is there's no reason for a token to have an indefinite life. Maybe it's a 90-day token. Use it or lose it. It looks very different than a security. Anyway.
Very interesting.
Very, very good input. One more last question, please.
How are you going to influence influencers? What's your go-to-market strategy?
How do we find influencers?
Yeah.
So we are hooked up with a company that has a database of 1 million influencers with extensive geo-demo data on their followers. And we basically take on an advertiser and immediately look at the market that we're looking for and extract, let's say, 1,000 influencers that we need, invite them to onboard that moment, and that's how we do it. That's why we only have 1,000, because we only do it per campaign that we have done so far, and we're young.
Thank you. Thank you.
Thank you very much.
And now we have Zag Networks. Let's welcome Zag Networks.
Good afternoon. Customers sitting on $100 billion unredeemed loyalty points today all over North America. And up to 46% of customers are willing to pay extra if you personalized membership. And businesses spent $2 billion in fees in running their loyalty program every year. My name is Paul Reddy. I'm a global CTO at Zag Networks. We are building a custom blockchain to disrupt the GBRL industry. Gift cards, benefits, rewards, and loyalty industry. To ignite, spend the unspent, utilize the unutilized points and rewards and gift cards. We do this with our Zag app. As you can see, as a user, you can log in. At any particular point, you can get cumulatively what points you have, and you can convert into local currency or Zag tokens or Zag points, and you can spend with the merchants nearby who are part of the network, or any merchant who takes local currency. The other important thing we bring is peer-to-peer. If you wanted to gift your friends and family in the click of a button, voila, it's done. Now, as merchants, part of this, our Zag network will provide a value to earn points across all customer engagement programs. And we have Zag protocol, which will allow merchants and consumers to interact seamlessly in a secure environment for creation, redemption, and exchange of values across programs in GBRL industry. Now, Zag network is powered by Zaggle. Zaggle is today a $100 million revenue company in India and Singapore markets, and also entering into US markets. And we have 2.5 million users today, and 1 million plus gift cards and prepaid cards in circulation. And also we have 6,500 merchants today, and we have 2,500 corporate accounts. And as you can see, these are some of the brands who are already willing and committed to be on our Zag network. And some of the gift cards you can see, like benefit cards, supper cards, all this could be available on Zag app. Now, Zag network transforms the GBRL industry by bringing transparency, trustless network, one common ledger, real-time rewards access, and program scalability, real-time interoperability between merchants, and immutability in multi-branded program. And we set apart with our competition, as you can see here with the list, by providing a custom blockchain and time to market. And also we have an IoT sensors to have a customer engagement while you go in store so that you can airdrop tokens. Our business model, as you can see, Zag network with all these features is program fee. Anybody who joins our network will get a program fee for being the part of the network. And add-on services fee will be for extra services. And also transaction fee. Anytime businesses credit loyalty points to consumers, and consumers, whenever they go and spend the points in store, you get a transaction fee. And also, whenever they convert into local currency. And also, whenever they transfer. So this is our revenue model. We have a great team. As you can see, our team is 200 plus years of work experience, and we want to accelerate the development and deployment of this Zag network and Zag app to ignite customer experience, spend the unspent, and utilize unutilized points and rewards, and to mine GBRL industry with a cumulative annual growth of 24%, and with $3 trillion total available market by 2023. Thank you.
Thank you, Zagnektor. Question, please.
So I guess one question I have, if I go and I spend at a merchant, how do you get the data from their retail point of sale system into the ZAG network?
Yeah, so the merchant will be part of the ZAG network. They sign up. And once they sign up, it's a blockchain technology, right? So basically everything, whatever the programs they run, they give points. They could be branded points. And once the customer has the ZAG app, and they can convert into ZAG points or ZAG coins.
So I guess, so in other words, instead of trying to go do the integration work from ZAG Network's perspective into the point of sale system that a retailer might have, you're trying to create a strong enough network that they will come to you and say, I want to integrate with your network.
Right. Today, they have already loyalty programs, right? They're already running. So all we are doing is giving technology, being part of our consortium, ZAG Network Consortium. And immediately, they have the benefits of blockchain technology.
Arvind.
Yes.
One question I had is, I mean, today, there is no token or currency, intermediate currency. There's direct conversion from fiat to loyalty points, or vice versa.
Yes.
What was not, immediately clear to me is why that system can't work. I mean, there are lots of issues in getting the distribution and connectivity and all of that, but the conversion per se from one, let's say dollar to, in our case, thank you points, and vice versa, is not that difficult. So I was wondering, if you can comment on that, number one. And then the second question I had is, one of the things we've heard, from people is, when they have a loyalty program, they want it to be their brand, not ZAG or any other brand, right? So how do you tackle that issue?
Okay. So first question. To answer your first question, anybody who wants a fiat, that's already there. But what we bring here is the stability into the industry, because every brand who enters have a 5-star hotel points are not equal to 3-star hotel or a restaurant points, right? So we have that. We have a rules, and when they're part of the ZAG network, they follow that, and we manage the value of the points to convert at any particular time. So branded points to ZAG points, and ZAG points to ZAG coins, and then to fiat into local currency, whatever the value is. So in that way, it harmonizes. It doesn't, disrupt the transactions. That's number one. And second question, I wanted to hear your second question.
It was more about branding, right? So.
Oh yeah. So today, ZAG network is a technology. They keep their own brand. When they come in, they communicate the way. So basically, the ZAG app, what we also have SDK. So they can plug into, say, for example, Citi has your own app, right? You can plug in, but you have this capability of being part of this blockchain, custom blockchain community.
Last question.
I didn't understand your first comment about ZAG's already out there. Is the app and your system started yet, or you just have some partnerships that will jumpstart you?
No, Zaggle is a current non-blockchain company which has revenue. Now we are developing the custom blockchain with ZAG network and powered by them, and we are implementing it. Our MVP is in September of this year. We'll have a minimum viable product out, and with all the customers I showed.
Okay, and how big is Zaggle? Like how many customers, usage, turnover, whatever your metric is?
Yeah, $100 million revenue company today with the 2.5 million users and 6,500 merchants and 2,500 corporate accounts.
But you're raising money for like a spin-off of the ZAG blockchain app or whatever token app.
Yeah, so ZAG Network is a separate company.
Yeah.
So we are doing ICO. We are in pre-sale right now. Our soft cap is $7 million. Hard cap is $38 million.
Got it.
And ZAG coins are 10 cents. That's the value we set.
Thank you, ZAG Network. Thank you. Okay, and we're almost at the end of this panel, so judges, if you could enter score for ZAG Network.
Thank you.
And our traditional question, if you could give quick feedback. One company that make you most exciting. Who's Victor? Let's start from you.
That's the company which is doing this equity for business. For business premises, office space.
Building bits.
Yeah, building bits.
Okay.
Yeah, I'd actually agree. I mean, they feel like they've got the timing right, and you know, I would say though that we've also seen a few other startups trying to do the same thing. Maybe not with a token though.
I thought it was Custos. I think that I thought seemed like they had a great team, and it's a very, very big problem. And blockchain was built for, things like this.
I really wanted to like the one doing the DRM solution, but I couldn't get my head around how big the market is, so maybe I should have asked the question. So I would actually pick the influencer marketing project.
Okay.
That seems huge if they get it going.
Cool. Okay.
What do they call it?
I cannot pronounce
Suede, right? Suede?
Yes.
I was swayed by Suede. The thinking is you create the next AdWords, the next Facebook. You create a platform for people to buy that doesn't exist right now, and a lot of money may flow to it.
Thank you. Let's thank you, our judges, our jury, and presenting companies.